big buyers of Russian oil. India is definitely one, China is the other. And now we're hearing that Russia may be set to lose that other major oil buyer because of the American sanctions, because these reports we've been gleaning are suggesting that China's state oil majors are likely to suspend the buying of Russian oil as well. So that's an important development. Let's break down the implications of these American sanctions on Russian oil for India. We have Mark Chandler joining us. He's Chief Market Strategist at Bannockburn Capital Markets. He joins us from New York. And from New Delhi, energy expert Narendra Taneja is with us on the phone line as well. Great to have you with us, gentlemen. Mark Chandler, if I can begin by asking you, because now that these sanctions have been imposed and we're looking at Russian oil firms, Rosneft and Lukoil, India's refiners now are reportedly reviewing crude contracts that they have with these Russian companies. How immediate and deep are you expecting India's exposure to Russian oil change? Because my colleague finds out that we rely on intermediaries and already our dependence on Russian oil has gone down.
I think, you're right. There has been some fluctuation in Indian buying of Russian oil. You see this through the refiners. But I think that the key point really is that the sanctions might be targeted, at least ostensibly, on Russian oil companies. The U.S. insists on imposing what we call secondary sanctions. That is, anybody that trades with those Russian oil companies, intermediaries or otherwise, can themselves face U.S. sanctions. And so this is not just an attack on Russia, a pushback against Russia, punishing Russia for its invasion of Ukraine, but it is also targeting both India and China as the two largest Russian oil buyers. I think that if President Trump was right, that President Modi has indicated that he would not buy, Prime Minister Modi would not be buying more Russian oil, then these secondary sanctions would not be impactful. But I think that they are impactful, and I think that this we have this from Ronald Reagan, as our former U.S. president said, trust but verify. And so not only do we have President Trump's claim that Modi says he's not going to be buying more Russian oil, but these sanctions sort of put teeth behind that.
Let me take that across to Narendra Taneja. In the light of what we're hearing Donald Trump say, from the sources that we've been speaking to, we are looking at a kind of limited impact of this. What's your reading of the kind of sanctions that America has imposed on these two Russian oil firms, and now that China is dropping its dependence on Russian oil, how deep an impact are you seeing on those oil prices, Mr. Taneja?
Well, first of all, there is no official confirmation from the Indian government side on the whole thing. We've heard, of course, what President Trump has said, but there is no official confirmation from India. And similarly, there is no official confirmation from China, to the best of my knowledge. Now, the question is that, it's actually far more complicated than what it appears on the surface. For instance, Rosneft is a state-owned entity, but there is also heavy investment done by Qataris and a few others in that company. Number two, Indian company ONGC Videsh also had joint ventures with Rosneft in Russia, including Sakhalin-1, which is a flagship investment by ONGC Videsh. The total investment of ONGC Videsh, which is a government of India company, is in the region of $18 billion in Russia. And Rosneft also owns a refinery in India called Nayara, refinery. Number two, the important point to keep in mind is that, our refiners, they buy crude oil from Russia under two systems. Number one is there are, of course, long-term contracts, not binding, but long-term contracts nevertheless. Number two, from the, spot market via Dubai and Singapore and other places. So now the question is that as far as the nationality is concerned, when you buy from the spot market, it does really matter. Second, the question is if Russian oil completely disappears from the global oil supply system, if India stops buying oil from Russia, China stops buying from Russia, we are talking of 4.5 million barrels of oil disappearing from the global supply system, which means the oil prices will go up to $130 per barrel. Can American economy afford it? Can President Trump's voters can afford it? Answer is no to all these questions. And the global economy, can it afford it? No. So I think it's important to understand that Russian oil is continue to be available to the world economy. And my own sense is that President Trump, while he's doing all that he's trying in order to put pressure in India on tariffs, he will also see that American consumer, especially his voters, majority of his voters, they want cheap oil. They are not ready to pay $130 per barrel for gasoline in America. So therefore, it's far more complicated. And to say that China is refused, China is building pipelines. These are pipelines. These are long-term contracts, 20 years long contract to buy oil from Russia. They just agreed to build another pipeline. So these pipelines means that you have long-term contracts. You can't really withdraw from them overnight. So I think what we say, we have to be extremely careful. We have to understand how global oil system function, how oil relationship function between China and Russia in particular. And India also, since the world is totally divided, we are heavily dependent on imports. 89% of oil that we consume, or we consume 5.5 million barrels of oil every day. We have to ensure that it is available to us. And moreover, when you look at India's overall foreign policy approach, we are very, very, protective of our strategic autonomy. So India is going to do what is in the best interest of, our people. And so far, the government has not intervened in what Indian refiners do in terms of where they bring their oil from.
Yes.
To the best of my knowledge, there is still no directive from the government to any refiner, whether public sector or private sector. But as I said, let's wait and watch.
We are waiting and watching. There's no doubt about that. But in the meantime, Mark Chandler, now the rhetoric is flying about, and China has done what it has done by reducing its dependence on Russian oil. We're looking at the impact on oil prices. What do you see happening now with oil prices, even if it is about rhetoric at this time, to be able to get Russia to the negotiating table, which is what Donald Trump is aiming for, I would imagine?
I don't know. I mean, I think that the U.S. has misplayed its cards when it comes to Russia. We've taken a long time to put on these sanctions. We're now stepping up the sanctions and allowing Ukraine to use long-range missiles. But just this week, President Trump has denied Ukraine access to the Tomahawk missiles that apparently scared Russia. So I'm not so sure. I think I think the point earlier was correct. Taking Russian oil off the market, or even threatening to take it off the market, we've seen a big jump in oil prices. And I think about what does this mean for the U.S. Of course, we're going to get the CPI, U.S. CPI tomorrow. We're looking at the 5th consecutive month increase in CPI. But look at India as well. I think that the higher price of oil is going to boost Indian CPI, and this is going to be a bigger problem for the central bank, which just last week or the week before intervened aggressively in the foreign exchange market to stop the rupee from falling after it fell to new record lows. I think the rupee has held on to some of those gains, but it's precarious. And I could see the rupee again challenging the Bank of India's resolve to curb inflation and limit the currency depreciation.
So if we are talking about inflation, there is going to be a negative impact if this actually plays out in the way that the sanctions have been imposed. But what are the chances, Mark, that Russia could find alternate buyers or perhaps do some shadow shipping routes to sustain those exports? How could that possibly blunt the sanctions, the kind of market impact, the kind of impact we are seeing on prices at this stage, and including that on India?
I think you're right that there's a lot of ways that Russia and other countries have tried to circumvent whether they're tariffs or sanctions. I think that part of the challenge, though, is at the same time that these sanctions on Russia are coming in, the U.S. announced it's buying back more oil for strategic reserves. And we know that a lot of the Chinese buying has been also building up their reserves. So I do think that it's not going to be foolproof. I think the market is recognizing that even if this takes off half of Russian oil from the market, we're still looking at higher oil prices. And we've seen today in the global capital markets, global interest rates rise for fear of the implication of higher oil prices, what it means for inflation. So I think that's really is the key focus. But I think you're right that we can't count on Russian oil to be completely blocked out. But also think about the complication. India refines Russian oil and sells the refined products back to Europe and other countries. And this is going to have a knock-on effect, not just on oil prices, but on all those other products coming from oil, jet fuel, diesel, gasoline. And this is really the sort of the supply chain, I guess, of oil and the refined products, which are going to have ramifications throughout the global economy, even if they don't stick completely, to your point, not 100%, but even if it's 50%.
So in that case, if India has to kind of ensure its energy security right now, Mr. Taneja, do weigh in on this in terms of the approach that India needs to take. You did say that India has remained more or less balanced in its approach towards buying Russian oil to serve its interests is something that they have prioritized. But do you see more Middle Eastern contracts now for India, African sourcing, more reliance on renewables? How do you think India is going to take this on?
Well, good question. You see, India's worry is not the supply. There is plenty of oil available. If we, for the sake of discussion, if we stop buying oil from Russia, we can always buy oil from other countries, from Africa, Latin America, Guyana, Saudi Arabia, Iraq, Kuwait. There are so many other sources available. That's not the issue. But our worry is that if Russian oil disappears from the market, even if by, let's say, 50%, which means if 2.5 million barrels of Russian oil disappears from the global supply system, our worry is the prices will go up. We are extremely sensitive to the price of crude. Our worry is not supply, not at all. We get oil from 40 different countries, geographies, and regions. So that's not our worry. The question is that if prices go up, because 2.5 million barrels or 4.5 million barrels of Russian oil has disappeared from the market, then the prices will go up to $120 per barrel. And as far as India is concerned, since we are hugely in energy deficit, heavily dependent on imports, our worry is that even if the price goes up by $1, that's really bad for us. So we cannot afford oil prices to go beyond $70 per barrel. And here we are talking about if Russian oil disappears. If China also stops buying, I don't believe this report, but let's say for the sake of discussion, if they also stop buying, then oil prices are bound to go beyond $120, $130 per barrel. And forget about Indian economy, the world economy can't afford it. So therefore, energy security for us is important. I don't think India is going to say we are not going to buy oil at all from Russia. Probably just for the sake of negotiation with some give and take and some kind of arrangement, we might say, all right, we can reduce a little bit. But to say that we will stop buying oil from Russia completely, this I don't think is not happening. President Putin is scheduled to visit India within the next 6 weeks. And I know it that, Indian delegations are going to Moscow, Russian delegations are coming here. And we are, in fact, also talking of expanding our ties because Western countries have moved out of Russia after the sanction. So there are opportunities available for Indian companies to go and invest there. And we have already invested $18 billion. So our strategy is clear. We don't want to put all eggs in one basket. We will buy more from America, which we have. In fact, our oil import from America has gone up by 90%. By next summer, it's going to go up to 170%. So we are buying more oil from Russia. We are buying from Guyana also now. The point is, but at the same time, we can't completely stop buying from Russia. We know it's all geopolitics and politics, but for us, we have to make sure no compromises when it comes to India's energy security. Because Indian economy can't afford it.
The Indian economy can't afford it at this stage. What's the kind of risk you see to Indian equities as well, Mr. Taneja, particularly refiners and logistics players, energy-intensive sectors? Do you see them taking a beating immediately because of the kind of news flow around this?
Well, interesting question. You see, good thing is that despite all what President Trump has done, or before that, all kind of, sanctions and all that, there are no sanctions as far as India is concerned against Russia or against oil. Even today, America has not sanctioned Russian oil. They have sanctioned two companies, two corporate entities, one public sector, that is Rosneft, one private sector, which is Lukoil, which has a huge presence across the Western world in terms of, petrol pump and so on and so forth. So as I said, they have still not said that we have sanctioned Russian oil. Russian oil, as we talk, still remains unsanctioned. It's not sanctioned by Europe. It's not sanctioned by America. So we need to understand what exactly it means when you say we have sanctioned these two entities. There are other entities too who are working and selling oil from Russia, including Indian entities and Chinese entities and a few others. So we have to wait and see what it is. Is it kind of thing a pressure tactics, or President Trump is more serious about it? My own sense is they want to see what happens now. But as far as supply, oil is concerned, there's plenty of oil available in the market. We don't need to worry as far as supply is concerned. Our concern is if Russian oil completely disappears, then the global economy will suffer, and the economy that will suffer the most will be this economy of a country called the United States of America.
So that pressure is building up on global economy, as it were. Talking about the kind of sanctions that have been imposed, my colleague Shrimi also has a question for our guest. Shrimi, do come in and go ahead.
Yeah, so Mr. Taneja, Shrimi here, just wanted to understand that typically, since you have been tracking the space so closely, at what level of crude typically government intervenes? I mean to say intervention, the policy decision like reducing the excise duty, etc. At what levels? Because they usually talk about that if crude reaches 120 per barrel, etc., then they perhaps look at the excise duty. So you think that the kind of sanction we are seeing will reach to that level, and any kind of policy intervention would come from the Indian government side?
That's a very interesting question. You see, my sense is that oil is in the region of 65, 64. And if you look at the demand and supply fundamentals, I think the oil is going to stay between 62 and 70 over the next 6 months. Now, the question is that if there is a trigger like geopolitical, like China saying no, India saying no and all that, which is highly unlikely. But in such a scenario, if oil goes even up to $80 per barrel, I think Indian economy and Indian, can absorb it. Up to 80. But the government has to step in the moment oil crosses $80 per barrel. And is what the government does, the first thing is Indian ministers, they pick a phone and talk to the Chinese, talk to South Koreans and Japanese. So there is this, unofficial template available. They pick up the phone and start putting pressure on OPEC and also America that, they start intervening. And then oil prices started climbing down. And as I said, the country that's most sensitive to higher oil prices, of course, India, but more than India is the United States. So therefore, I don't think we need to worry too much. As I said, China is not going to stop it, no question. India also may bring, we may say, all right, not so much, from 34%, we may bring it down to maybe 28 or 20 or whatever, depend on the importers. But I think so. At this moment, when I look at the whole basket, at the landscape, I don't think there are any strong reasons for us to worry, or for that matter, those in the petrochem industry or the other independent associate industry. I don't think at the moment, it's what is playing out right now is just geopolitics. So wait and watch. And if you enjoy geopolitics, enjoy it for the time. Then no reason to worry.
No reason to worry, you're saying, Mr. Taneja, and that would be music. Today. That would be music to the ears of our investors who are in the markets and looking at the impact that is likely to play out. We will have to monitor that space as well. But yes, geopolitics is currently up front in the entire scope of events unfolding. US sanctions on Russian oil, they would perhaps push India to rethink our energy sourcing, our pricing, our strategic balance as well. It's a complex challenge with global implications. I want to thank our guests for joining us, Mark Chandler, Narendra Taneja, and my colleague Shrimi. Thank you for joining us on this broadcast.